All right. Is it already going?
Yes.
Is it going, folks? 3 p.m. Tuesday, our regular time to talk about a bite of knowledge out of this vast world of finance and accounting and tax. So today's topic I bring to you is a question from a client. And can I convert my business from C-Corp to S-Corp? And as soon as that question shows up, and my thinking goes on things that people would not be familiar with. And I want to say that, well, it depends whether you have a gain and recapture gain, and do you have losses. So that is a lot of consideration. Today, we summarize it for you. Doesn't mean that you need to be an expert of what to do, but at least you know it is not as simple as, okay, yes, I do that and it will be done. It is a little more complex, right? So what I'm showing you right now is our website, folks. You can literally come to our website. Let me close this one. You can come to our website and then make an appointment with me right here. You don't have to call our office. You can just come over here and you click my name right here, Ying CPA, and then you will find my time that is available or not. So you know that I'm available for these hours. So any orange hours come out and you select the date and you know what you can choose. So you can book a time right here without needing to call the front desk. So that's our appointment button. Then obviously I want to just quickly tell you the picture on the right. That is our new building. Not new, it's a building that we're renovating to be a community CPA building in Houston, Texas. So the address is already there. So looking forward to visit us in Houston, right? Not in the summer right now, it's too hot, but go around wintertime. That will be a real treat. And I also want to bring to your attention about accounting today. This is one of the big accounting media and newspaper magazine that is a lot of information in there is about accounting firms. So our firm is being named top 10 IT accounting firm that advanced in IT technology. We are named as the 10 firms. We are one of those 10. So place to brag about myself, right? Brag about our firm. And here is the YouTube channel. Everything we talk about today, it will be deposited in here. And you can subscribe to our channel then know what we bring to you. It is really a place for knowledge. If you find out there knowledge are a little bit sketchy, and when people says to you get that all the time. You see a title, then once you listen up and going in, it is not talking about that. It's just like they use the title to entice you to spend your time, but not giving you what they say they're going to give you. That you will not find that way here at our channel. We tell you what we talk about, and we go with the topics, and we even organize our PowerPoint just to make sure that your time is valuable as much as ours. We want you to get what we want to say to you and answer your question. So should you convert your business from C-Corp to S-Corp? Now, about our firm, you know about community CPA, don't you? We have 27 years experience. We have more than 10,000 clients. We have 5 locations. And, me as a CEO and a managing partner, I wrote 2 books so far. And I also served on a committee which is a federal advisory committee to IRS. So some load of credentials, really just trying to impress you so you understand we're not some young kid on the block, and we have been doing the same business for a very long time. So that is my lifetime journey, right? Just doing nothing but just accounting, tax, and the audit side of things. No responsibility disclaimer, you know what that means. And just make sure that you take the internet knowledge with a grain of salt. Don't just trust everything. So, why it matters to move from C-Corp to S-Corp. Choosing the right business entity has many implications. that includes to save your tax dollars, right? You're just paying too much taxes in this structure, you want to change. But the most common structures in our world is the sole proprietorship, partnership, limited liability company, S-Corp, C-Corp, nonprofit, right? So those are the most common one. In some cases, the business may decide to switch from one to the other, and a lot of times to switch from one entity to another, the technical word they use is called election. So that's what election means a lot of time when you talk to the tax people. So from C to S, of course, this is just one-time switch, right? From C corporation to S corporation. That is a one-time election, but you could also elect LLC to S Corp. You could also elect your sole proprietorship LLC to S Corp. So there's so many things that you are switching. And the people wants to go to S Corp for many, many reasons. Because S Corp is a pass-through entity. What that means is whatever you make on the S Corp is going to be taxed on your personal tax rate. So our personal tax rate is not cheap, right? If you make a lot of money, you're probably paying close to about 50% of taxes. So the personal tax rate is high. But the reason S corporation is still very attractive because if you have a loss in S corporation, it also goes to your 1040, reduce the high W-2 maybe you're getting. So from tax standpoint, it is all correct way to do it, but when and how and the switch from where to where, that is a science. Although S corporation can provide some substantial tax benefit over C Corp in some circumstances, there is a potential costly tax issues here on hand as well. This is what we want to talk to you about. So you may give me example like, oh, I want to be S corporation because every year I lose about $300,000 and I have a W-2 of $300,000. Ying, if I have my business under S corporation and my AGI is 0, so I can get all my tax refund back. And that is very good, like $70,000 coming back to me. Sounds so exciting, and it is so correct. And you are right, and it is going to give you that. But however, and if you are in C corporation, all these losses are accumulated under C, and you just felt like, I need to go to S Corp, so I want to elect. So hold on to your horses, and let's talk through this. Assess before, right? Assessing your situation before making decision to convert, that is the key. So we will give you 4 major considerations. So number 1, I know this is kind of weird. I put the inventory right here. I'm trying to impress you with a concept. So a lot of business don't have inventory. If you are a professional service company like Community CPA, we don't have inventory. So what do you mean by LIFO, FIFO? We don't care, right? But what here it says is, let's say if you are a C corporation, you're running, say, a furniture shop. So you have inventory coming in all the time, and you sell them all the time. So when you sell first in, first out, that's not a problem, because you may bought the furniture 3 years ago for $5, and now you sell for $50. You made profit, so you report the profit. But what if you are going to do LIFO, which means last in, first out? LIFO means last in, first out. Means that you bought the same furniture, but 2 years ago was $5, but now it is $25. So you're going to sell $50, match to your $25. So your gain is what? Is $25, right? You didn't gain $45, but you could gain $45 because you use the first in, last out method. So if you use last in, first out in inventory, and you have this what we called potential gain that you did not realize, right? So you want to make sure that as a C corporation, if you use this method, you must pay taxes on the benefit they deliver by using LIFO. So you must pay that gain. You're supposed to recognize, but you didn't. And otherwise, when you convert to S corporation, this gain would be taxed in S corporation and throughout the next 4 years. So of course, when you convert, if you are really running a furniture shop, you want to convert, and because you don't have a lot of license issues, not like you are running a hospital or a physician office or dental office, you got your EIN number tied with the insurance, it's too much work to do. We would just simply tell you to form a new corporation instead of converting, because that potential gain that you need to recognize can be huge. So with that said, I am using this as an example to say that you want to consider your unclaimed gains in C-Corp, because when you convert, that need to pay taxes on the S corporation. So now, next, what we thought. So LIFO is very typical. That's why it's number 1. Then the other things is more general. It is the built-in gains tax. So this S corporation generally are subject to taxes, right? Because if you have S corporation, it goes on K1. K1 reported on your 1040. So you don't pay taxes on S corporation. But those that were formerly C corporation are taxed on built-in gains, such as appreciated property, that the C corporation has when the S election become effective. If those gains are recognized within 5 years after the conversion, and this is where you need to pay taxes on the S-Corp. So this is generally not a good idea, although there is a situation where S-election still can be producing a better tax result despite the built-in gain, but you got to consider the built-in gain that inside of the C corporation, how that's going to come out to be taxed in S-Corp. So it is not a totally free and easy transition, right? Just like I said, if you are really wanting a S corporation, just depends on what C Corp you have. If you're not tied with a lot of regulations, and if you can just simply ditch that C Corp, close it out, and open a S Corp, that might be your best way to go, because those losses you have in the C Corp can properly come out when you close. So passive income. So this is another thing. S corporation that were formerly C corporation are subject to special taxes. So, you were C corporation and you subject to a special tax, and it kicks in if their passive investment exceed 25% of their gross receipt, and the S corporation has accumulated earning and a profit carried over from his C corporation years. So remember that when you are S corporation, if you have more than 25% of the income, it's actually not coming from your active activities. It's coming from your dividend, your interest, your rent, your royalty, and even stock sales gains. Those 25% of, once it's going over that 25% of the gross receipt, the S corporation has accumulated earning and a profit to carry over. So that again will give you a taxes to pay on your S corporation, which you don't want. If that taxes is owed for 3 consecutive years, then the corporation's election to be S corporation can be terminated. So you can even disqualify yourself because of that passive income. So S corporation election does have a little twist in here, right? So really you don't need to be expert of everything, but we at least want you to realize that if you have a C Corp, you want to turn into S Corp, you need some serious consultation work to make sure it is done properly. And you can avoid the taxes by distributing the accumulated earning and the profit, which would be taxable to the shareholders. That's like your dividend taxes, and you distribute it out and you pay taxes, right? So in the C corporation, people call that double taxation because you pay the C corporation tax, then you distribute out to your shareholder and you pay it again, right? So you might want to avoid the tax by limiting the amount of passive income. So another consideration, unused losses. This is the last piece. We're talking about 4 things inside of when you convert from C-Corp to S-Corp and what exactly you need to be paying attention. So unused losses. So let's say you have a C corporation and it has a unused net operating losses. They cannot be used to offset its income as a S corporation, cannot be passed through to the shareholders. Did you hear that? So it's not like, okay, you got 2 shareholders. Now we convert both of you from C Corp to S Corp. So the losses you have on the C Corp $1 million, then 500,000 be one shareholder's loss, the other one is the other shareholder's loss. No, they don't get passed through. If the losses cannot be carried back to the earlier C corporation years, it will be necessary to weigh the cost of giving up these losses, because losses are also tax saving. This is where I'm saying that if you have unused losses, the best way to deal with C Corp is actually to close it out. Just close the C Corp out, let the losses come out. If it is a qualified C Corp and you have the code to document that under Schedule D as a capital loss without limitation. So really, there are things you can do to not lose the losses you have in the C Corp. That would be really important for people to take note. So what we talked about LIFO inventory. The reason we talk about that, we're trying to show you, identifying to you the gain, the potential gain that to be taxed. Then we have this built-in gain that you need to recognize when you switch to S corporation. Then of course we talked about S corporation, the losses and also the passive income, how that impacts you. So other issue to explore when you're thinking of switching, for example, shareholder employee of a S corporation cannot get all the tax-free fringe benefit that is available to C Corp, right? So, let's say if you own the corporation and you say that, oh, I want to get myself a medical insurance, and then that's available to, that need to be available to everybody in your S corporation, become a cafeteria plan, then you can deduct that out of business. But otherwise, you need to take your medical insurance to your 1040 to deduct. So it is not a very good deal. And you want to make sure that you understand the concept we talked about. S corporation, the S stands for socialism, the C stands for capitalism, and that is how exactly they play out. So in C corporation, you can do special benefit for your board of director, for your key employee, and things like that. And there may be issues for shareholder who have outstanding loans from their qualified plans. So this is a complication that if you have a C Corp, you have outstanding loans on the C Corp. When you convert that to S Corp, you really have to work out whether that is something can be transitioned to the shareholder or can be held by the corporation. Because if it goes to the shareholder, there's tax again. So it is a lot more complex than just easily, oh yes, I didn't change my EIN number, so everything should carry forward. That's not true. So there are changes need to happen, and when you are considering C to S. And these factors must be taken into account in order to understand the implications of converting, right? That's what we want to bring it to your face, so you can realize it is not as simple or straightforward as you were imagining. If you are interested in entity conversion, contact Community CPA for a consultation, or just go on the website, book my time, so we can look at what you have and give you some ideas. We can explain what your options are and give you plan. So that way, not only you're going to save your tax bill, but you also are not jeopardizing all of these histories that you already generated in the C Corp. And it will be, it will be one of the most important things for anyone to do. And if you are planning to do a conversion, to have the professionals giving your input, so you don't convert without knowing the consequences. Because if you really did it already, and then you realize what done wrong, to reverse that conversion, I'm telling you, is not simple. All right? All right. So here is the list again for our partners, and you can book our time and talk to us. And we also have our website and our YouTube channel name is Community CPA. And you can always email Catherine at communitycpa.com to get her the topic you want to listen. And here is our phone number. And we, as a firm, we open 6 days a week, Monday to Saturday. So to give some of our business owners who are absolutely too crazy Monday to Friday, then they have Saturday to come to us. All right. I am so glad to see you in my studio today. I haven't been in the studio for like at least 3 weeks because of the COVID I got, and I couldn't really talk without coughing. But this webinar today, and I think I got through without any issue. Thank you so much, and I will see you again.